Dear delegates, it gives me a great pleasure to welcome you all to the third edition of the world's largest Fintech Fest, Global Fintech Fest 2022, organized by National Payments Corporation of India, Payments Council of India, and Fintech Convergence Council. This edition of the fest is supported by Department of Economic Affairs, RBI, and IFSCA. My name is Amla Agarwal and I'm your host for this session. The topic of our discussion is Unbuilding the Bank Core in the Cloud. Microservices powered architecture for future proof banks. Of course, this is a part of a panel discussion. We're glad to have an esteemed speaker lined up for the same. So today, joining us virtually, we have Ms. Barbara Biro, Head of Digital Banking Ecosystem, RakBank, Mr. Sony A, Chief Information Officer, South Indian Bank, Mr. Santosh Kumar Madhavan, Vice President, Global Business Head, Innovation, Open and Digital Banking, HCL Technologies UK Limited. In order to moderate this session, we'd like to introduce you to Mr. Nilesh Nakir, Partner EY. At the end of this session, we'll be taking few questions, so please keep it ready. So now I would request Mr. Nilesh to please take over from here.
Thanks, Amla, and good afternoon, good morning, and good evening to the people joined in and listening in. And thanks, Barbara, Santosh, and Sony. Um, we'll straight away dive in. Um, no, Happy to have a conversation on this topic. It's a highly technical topic, but I think the way to really look at it is all of us as part of organizations, who focus on customers first. Right, there's a huge element of being agile in the way we implement our projects, the speed at which we go to market, the scale at which we are able to approach our customers, and again, the agility with which we're able to scale up. And traditionally, the core banking platforms that we have seen have played a very critical role in this entire setup. We've seen monolithic implementations that have happened. But as the world has moved on, we're seeing multiple models emerge, right? And some very interesting models that emerge. And Barbara, my question to you is, in your experience, in rolling out digital offerings, now what role have you seen a core banking platform typically play, right? When you're looking at providing new products and services to your customers.
Well, it's we always have to look at this from two different angles. One is if the bank or the financial institution is using legacy core banking systems, or if it was fortunate enough to be able to get rid of those and have a more up-to-date core banking system, since the legacy ones are usually the bottlenecks of innovation. You need to do a lot of workarounds and a lot of architectural stunts to be able to overcome certain lack of capabilities of the core systems. And so that's definitely a kind of case which is overwhelming most of the traditional banks in many parts of the world. I know India is way ahead of the GCC or Africa or even Central Europe, which I have more visibility on. But I believe that in most cases the architectural stands are the ones which are playing the game very much. So it's always, and as you said, it's a highly technical topic, but technology is here to help the business. So we never can look at technology just from the technical point of view. We always have to kind of do the use cases first and analyze the underlying technology, what can serve those use cases and how we can serve those use cases effectively. Since you can buy any technology you want, everything is available. That's not it is hard to, of course, select the right technology, but that's not the hardest thing to do if you look at the entire business from a profitability perspective. Because we easy to say that we can implement 1, 2, 3 things, and then we get to a certain limit of cost save or headcount save or both, or so. It's always the basis of the use cases first. But if you look at digital transformation and you try to roll out something completely new, first you always have to upsize the teams and upsize the entire operations till you learn the lessons, till you fix the bugs, till you entirely sure about what you rolled out is going to work for a further time ahead. So it's always, I'm not sure if I answered your question, but this is how I see it.
No, you did, Barbara. And just sorry, a follow-on question is, do you generally have seen core banking platforms slow you down in your implementations, whether it's been in the Middle East or in Europe or in Africa, in your experience, having worked with multiple banks, right? Have you really seen a two-speed delivery capability where the core banking platform is generally the slower one to move?
Yeah, absolutely. Everything is very slow to move, and since now the push from the customer's end and the competition, the fintech, the challengers end is unprecedented, and the pace what this industry now is disrupted has never been seen before. It's now essential to eliminate or significantly reduce the go-to-market time here. And banks need to wake up that they cannot do this anymore alone, and they need to look out for certain partnerships within their ecosystem, or vendors or external parties who can do this for them more effectively than they could. And I wouldn't say that the biggest obstacles here are the core systems. I don't think so. I've never experienced that so much so far. But if I look at the where the industry is moving in the light of the real-time payments, the account-to-account payments, where the customer's end of pricing model is going to disappear or tending to disappear. The remittances are tending to be zero fees for customers. Card payments fees are significantly impacted and has to be reduced. Credit card usage is getting cannibalized by micro-lending alternate options. So if you look at where the industry is going and what kind of products and what kind of services banks must develop and offer to stay in business, the existence is at stake at the moment. So if you look at the new business model, I would say yes, the core systems are obstacles, because these traditional legacy core systems are not built to solve for those kind of services and products. However, for the current status quo related issues, I wouldn't say that those are the biggest obstacles. So there's always possible internal API, internal middleware application layer, which can somewhat solve for the lack of capabilities or lack of performance issues at the core systems end. You can always create some shadowing of certain data, which can be, so there are workarounds for this. I'm more worried about the future business model related products and services relevant capabilities.
Sure. Thanks, Barbara. And Sony, the follow-on question from what Barbara mentioned is that today it's not seen so much as an obstacle, but going ahead when we're looking at new business models evolve, right, we will have to relook at the way core platforms are deployed and changed over a period of time. Running the technology function of a fast emerging bank in India, how are you looking at it? How are you decoupling it? How are you really looking at breaking components, which is today monolithic, in its initial setup, to look at something which is, far more easier and quicker to deploy and change?
Yeah, thanks, Nilesh. But before I actually get into that, I think the key thing that I need to share is the context, as Barbara was alluding to, the context in which Indian banks are operating. I mean, India has been really, really fortunate to be, led by a regulatory body, RBI, which has been very visionary in terms of introducing a plethora of options on the payment front, a facilitator network like NPCI, which is actually rolling out products every second month or third month. So in that context, we need to really reimagine what is happening. I mean, 22 decades back when we started our implementation, we were all looking at branch banking getting automated. Core banking systems primarily evolved from that design to scale up in a very organic manner. If I were to add 1,000 branches, what should I do to actually scale up my core banking? And then it slowly started trickling in onto the delivery channels, which again was giving volumes. But then come 2016, we had this watershed moment of UPI coming in. I'm very proud to say that we were the first bank in the country to go live. But even in the wildest of our dreams or imagination, we wouldn't have thought about the kind of volumes that that product would have, brought in. So in India today, we have two problems. One is on the volume. UPI in July clocked 6 billion, which is almost 100% year on year based on the last year. Uh, this is one problem. So the scale is growing rapidly. Now, the other advantage is that for the ecosystem, the reason why it has become so popular is that it's highly interoperable. So it's not just banks who are actually processing the transactions. The front ending of most of these transactions are being done by non-banks. It could be a big tech, it could be a fintech, and that means that the bank who is sitting at the back end and trying to process these transactions has really no clue in terms of what is going to come in tomorrow or day after. There could be a fintech or a large e-com player who comes up with a grand offer for 3 days, which would completely change the dynamics of the game. And therefore, volume is one. The volatility in terms of the volumes is also the second thing. I mean, it's not a very natural growth that you can anticipate. Now, how do you plan and how do you keep yourself, ready, geared for that? Well, uh, banks like us, we thought about some of this a few years back. We went in for a major upgrade for our core banking, in which two big steps were introduced. One of them was that we completely enabled the API layer, which was missing till then. So from a typical ISO kind of integration, we moved to a XML based integration, which meant that we could open up our systems to various other systems. So that was one way of opening it up, and maybe a first step towards something like a microservice architecture. Then the second thing was that core banking typically works on the ZOD BOD kind of scenario. So you have to keep your systems ready for the next day, and you have to do all these batch processes towards the end of the night. So there was a little bit of freeing up that was needed, because otherwise that would have taken away an hour or two from the daily transaction processing. But then today, after having done that, let me be very clear that many banks in the country are seriously thinking about looking at how can I now improve on whatever design that I have. Because at the end of the day, a core banking system is the biggest SOR or system of records, which keeps track of every single transaction and event that happens. So unlike many other components in a payment journey, which could be a fraud risk management or a pass PIN authentication, here not only do I ensure real-time payment, as Barbara was mentioning, let's not forget that there is also a settlement component that happens a little later. So even if I were to have the best of real-time payments, unless my settlement is robust, I would end up in a out of fund position. So basically, there what we are trying to do is on two fronts, and this is not just me and my bank. I think ecosystem level we are trying to see whether wrappers can be built around core banking. And in fact, two interesting developments that I can cite today that our governor from RBI launched from NPCI suite. One of them is the UPI Lite, which is a classic example of how the transactions, especially UPI, has a very large number of low ticket. How can I shift those transactions away from core banking into some kind of a wallet-based system, which would ensure that my real-time payments happen on that mode? It is not going to clog my settlement, and as and when a top-up is needed, I can always use my primary checking account. This is one interesting move. The other interesting move, in my personal view, that will definitely have a little bit of give a breathing space for core banking systems in the country is the UPI on credit card. See, credit cards typically evolved as a product which was not directly hitting the core banking. It was only for book accounting purposes that we were using core banking systems there. So UPI on credit card, now that it is launched, of course, it is now right now on RuPay. Uh, if that scales up, most of these low ticket transactions are going to move away from core banking to parallel systems like credit card and so on and so forth. So that is one thing. The other area where all of us are trying to do is to decouple and try and see whether new age technologies like microservices, cloud based architectures can be used. But early days on that second aspect. But we are all trying to decouple this whole architecture and try and see what can be done on the payment space.
Thanks, Soni. And um, uh, naturally, being a system of records, as you mentioned, Soni, I mean, huge data repository now that sits as part of the core platforms. Santosh, in your experience, as a company that provides these services both on the core tech platform implementation and maintenance, as well as looking at data platforms. What are some of the experiences that you have seen where this is converging, where banks and non-banking finance companies both are leveraging the data sitting in the system of records, right, and superimposing learning algorithms for better decision making for the benefit of the customer?
Nilesh, thanks. I think that's an excellent topic that you brought in. So if you look at what Barbara mentioned and then Sony mentioned as well, so it's all boils down to the end consumer or the customer of the bank that you want to serve. And the technology behind it is all enabler, right? So when you look at the core banking data that's residing in the system of record, or any other information that you want to bring in because you want to create value to the end customer. So what I've been seeing in the industry across the globe, if you see, is that the more and more as the digital offerings have been rolled out, the consumer's expectation from the bank is very different, right? And that's where Barbara spoke about the fintech disruptors that coming in and chipping away. So one of the examples that I can kind of quote here and probably have a discussion on it, very interesting, is the personal finance management. Right? A very simple example. A third party provider who comes in, who wants to consume the data of transaction records of the customer, who understands, on the data of that which is exposed in some of the geographies, it's exposed because of the open banking as a theme that has come in driven by regulators, especially in the European region, PSG2, and in UK as well, driven by regulators, where they force banks to open up and said, hey, you need to ensure that you provide account information, provided the consent is given by the customer, and ability to initiate payments. These are the common things that you need to do. And that's where I've seen, a lot of these players have come in and said, I want to now leverage this data feeds that's coming in from different banks. So if I'm a customer of Barclays, I'm a customer of NatWest, I'm a customer of HSBC. As a customer, can I see all my data across all these three accounts in one place is one thing. Then the second thing is that how do I get a value from all the, now that you've understood my data, what can you give me, right? On what are the different aspects of my life that you've understood. So that's where it is moving from the day-to-day banking to more of a lifestyle banking, right? When you talk about lifestyle banking, it's about saying, how do I create value for the customer in the journey of the customer, right? So leveraging the power of data that resides in the customer's system of record, that is being exposed as, through the APIs, through API App Store, etc. Fintechs coming in, even the banks themselves who are using that, the data of their own platform plus other banks' platform to create this unique view is something that's the real value for the end customer, right? So be it able, ability to tell me that, okay, where is my finance? What is my finance position? Where do I spend most today? How do I save better for my property that I want to buy? How do I, what are the different things that I could do to ensure that I have a better, electricity consumption or any of that you could see from my behavior and add value to me, right? That is the customer expectation today. And a lot of this discussion today that we're having on core modernization, cloud, AI technology, adoption of data platforms, and how do you leverage these data platforms to create that value is all driven from that, changing expectations. So that is one theme that, I've seen constantly across the globe, and not just in the retail bank. You can expand the same thing into the corporate commercial bank as well. I've seen corporate treasurers wanting the view of integrated liquidity, integrated treasury management. They're talking about embedding, allow me to do the payments from my ERP systems. Can you integrate into my ERP? So there is a lot more discussion I'm seeing on embedded finance itself and saying, how do I enable payments, reconciliations, etc., all driven through the kind of customer ERP system. So that's a very, fascinating trend that I'm seeing. I think this is the common themes that I am observing across the globe. And as I said, this is where the value of data is kind of leveraged to create value for the end customer.
Yeah, and just on the same note, Santosh, that it's important, since we are talking about here now the core system related issues, it's important to understand that through the real-time payments infrastructure, ISO 20022, and ecosystem-related data what comes from merchants, governments, businesses, customers, through all these payments, all that gigantic amount of intelligent data, the legacy core systems are, honestly speaking, not designed and scalable to handle this type of data. So that will crack at a certain point. So this is where probably the cloud infrastructure could solve for some till some point, but since that also requires some kind of re-platforming certain legacy core systems before it goes to the cloud. And then if we're already managing this amount of intelligent data, what's supposed to provide billable service and product related information or mass, that should be handled differently. So if I'm kind of forced by the economy, by the market, by the financial environment, that I cannot charge customers anymore for certain things, which I did charge them before, then I have to close that loop at the other end of the story and kind of provide billable services to the other side of the transaction, to the merchants, to the governments, to the economy, which can and willing and happy to get these kind of services, but where are those managed? So nowhere, kind of in the legacy banks. So definitely the data management, the data strategy has to be heavily and very, very seriously thought through and reimagined based on all these ecosystem stories which are coming out of the future pipelines, hopefully. So it's that's the key. So let's just face it, the legacy core systems are not designed to handle this.
Absolutely, absolutely. I think what we are seeing as well is that this a lot of banks are approaching with the view of hollow the core. So, take whatever you have in the core, you decouple it and keep the lean core, and the rest of the functionalities you move into microservices API driven architecture, so that enabling you to kind of have that speed that you want in the front transformation that you want to drive. So that's another pattern that I'm seeing in the market. So absolutely well said, Barbara, that how the data is so important, and data strategy and the whole the 9 yards of data transformation is absolutely critical when you talk about the modern digital offerings.
Yeah, that's right. And so the two, three things that are coming, right? So one is really looking at, we said, how do we really take the integration layer out, enable it at the API layer? And that's something that Sony spoke about, the whole data aspects of it, right? How do it's being a system of records, naturally a lot of data sits there, but how do we really pull that out, both from a hyper personalization standpoint, as well as for making almost real time offers, both for the feet on street or the distribution partners, as well as for the customers themselves. Right. And then the whole decoupling of whether it's KYC, onboarding of customers, the whole aspect of credit assessment, especially in a lending kind of a frame, whether it's for individuals or SMEs, right, is on the business side. But I think there's been a huge push, both from OEM providers as well as from implementation partners of these OEMs to move to the cloud, right? So till now, I think a lot of the migration has primarily been focusing on migrating surround systems to the cloud. But then again, there's a huge push to see how can you really have your core platforms being deployed in the cloud as well. Right. And um, Sony, the question, and obviously Barbara and Santosh, to you all as well. What do you think? Is that something that is going to give the financial institutions any real edge of having platforms onto the cloud? And if so, then what kind of benefits can these financial institutions and customers expect?
I think as Santosh was mentioning, let's not forget that the whole dynamics of consumer behavior has dramatically changed, and banks are actually expected to be at every single leg of the customer experience, provided he gives us consent to be there. See, I just wanted to highlight what is it in store for us. See, all along we have been talking about a customer walking into a branch long time back. Nowadays, the customer is actually initiating the payment on his own. Slowly, we are also moving to a stage where the customer is physically not needed, for a transaction to get through. It could be in the form of mandates. In India, that's also quite a big number. Nilesh was earlier talking about Bharat bill payment just before the talk. UPI, AutoPay, all of these are NACH. These are all payment channels which are adding up to the volumes, even when the consumer is not present, which is actually going to, kind of extrapolate the volume that we were talking about initially. And imagine a scenario where with 5G, with IoT coming in, if we have smart devices initiating transactions again based on mandates given by the customer, based on pre-fill, whatever logic and rules that are set up, these entire volumes would actually be going through the roof. And therefore, uh, whether core moving to cloud or hollowing the core, as Santosh was mentioning, is the solution, I would primarily prefer to look at the second option, wherein you have to start looking at re-architecting the core based on the needs, not just internal, but looking at what is happening elsewhere, and then figuring out what is the best mode. Because if I mean, there are use cases where core banking is also moved to the cloud, as you rightly mentioned. In the first phase, many banks like us are planning about starting with cloud native partnerships, so that we don't add anything to core, we keep everything away. Credit card, for example, is a classic example. We launched along with a fintech partner, and that scaling and sizing is happening independent of core. We launched something on the supply chain, again, completely independent of the code, again, with another fintech partner. So that's a very easy to use strategy because we know very clearly what we're getting into. Second strategy is to do the lift and shift with or without re-architecting, which is where there are divergent views. There are folks who have done it without re-architecting, and there are people who rather prefer to do a re-architecting and then move. But when we are talking about re-architecting core, because of its complexity and the kind of modules and the vast logic, the interplay that happens between these modules, it's definitely not going to be easy. So the best strategy that we are seeing there is to look at which are the options, which are the services which actually are going to get used the maximum during a given day or in a given period, and then try and do something around that, so that at least I'll have some low hanging fruits that I can attack first, and I can give a greater benefit to the customer who is transacting. Today the technical decline needs to be somewhere in the range of 1%, which is the kind of benchmark that all of us are targeting. So can I bring it down to 0.5? Can I bring it down to 0.25 for a specific, let's say, P2P transfer, where the entire journey is owned by me? Then can I move to P2M, where the merchant journeys can be fast tracked? Slowly, once these things are put in place, I'm sure that we will have a chance to look at the other modules also, where the throughput and concurrency need not be a pressing demand, but to keep ourselves or to future proof ourselves, those are the modules that can be looked at. And as far as the implementation is concerned, again, with the huge amount of importance on the cybersecurity aspect, the regulatory aspects around data residency, there are concerns on moving PII data onto cloud, and therefore every bank in the country is doing it in a very calibrated manner, where we are trying to see which are the applications where these kind of risks are very minimal. Wherever data is there, we are trying to anonymize the data so that the risk is mitigated, and then the rest will be done, which is why I was hinting and alluding at a hybrid model, wherein I probably have the data at my end to the best of my capabilities, and then I start using and exposing services on the cloud so that I get the best of both worlds. Having said that, it's not an easy thing, especially for a large system like core banking, but all of us are taking steps in that direction in a calibrated manner.
Yeah, I think that what Sony just mentioned, I completely agree. I think, especially for the banks, which are large banks, right, with the voluminous data, there being, a number of clients base is more, it's very difficult for them to kind of just say, oh, I will do a lift and shift, because there's no ROI just by moving, your core to cloud, and, you still continue to spend the same or even more sometimes in some cases, that, you're just putting the, workload there. So I agree that that's the right approach, is that you look at what is the real value from the core service that you really want to expose, and then design something around it which makes sense. But otherwise, this new core, or the people who are using core in cloud, typically if you see, those are banks who are new banks, who don't have any legacy. They are typically the new age digital born banks. They, for them it makes sense, because you don't have anything, you don't want to have your own data center, go straight into the fourth generation core banking, and you start from there, right? So that's a different segment where they are kind of, you'll see a lot of blanks on the cloud. But for the big banks, I think it's the right approach. As Sony said, I completely agree. That has to be the pragmatic way of doing it, because you can't afford to lose the corporate's reputation at stake, client data at stake. There's a lot of things there which a new bank probably don't have the similar sort of concern. I mean, they're looking at value creation and so on, but they don't have the spread of different products as well. They probably have 2 or 3 products as compared to the offering from a big banks. Like, that's a big difference.
Sorry to come on my very blunt European way, but there is a very, very simple and profane way of making this tangible. For example, in my view, so if you can tell me, or if at least for yourself, how much is the cost of managing one customer per year for a traditional bank? Don't say it. I have some ideas. But if you compare it with the really, let's say, successfully operating challenger banks cost, which is like TNX, Monzo, Revolut, the big ones, they run the entire core system with 4 people. Their cost per customer per year is less than $3. Is the core system an obstacle for traditional banks now? What do you think? The answer is crystal clear, I guess.
Yeah, that's true, Barbara. And obviously, I think we also have to keep in mind that the established banks obviously have, they've gone through a journey, right? So the neobanks that you spoke about obviously have started the journey recently, right? But when you look at established players, they've obviously gone through a journey.
Very soon they won't be that much recent because the clock is ticking. Everybody has now experience with it. Apple is coming out with a bank, and Apple hasn't started recently. That's a giant. Nobody can question its stability and financial power. And
True.
definitely that will be something what's relevant and up to date and super technology. I don't think we should hide behind excuses anymore. There are things, technologies available. There are technology, there are solutions. What traditional banks can buy and use and integrate with and leverage on, instead of trying to replace this entire legacy system with something which is not really clear at this very moment what it will serve. Because as I said, so there will be definite need in the next couple of years or months to offer certain different type of banking services and products. And merchants are driving use cases, customers are driving the use cases, not banks anymore, not even fintech, I would say. So merchants has their own idea of how and what kind of payments they need, or what kind of instruments they need to facilitate or thrive their business, enable their cash flow instantly, enable intelligent data to approach their customers more effectively, and they will go for it with a fintech. If a fintech enables it faster and better, they will not consider anymore traditional banks just because they are here for 50, 100, whatever years. They won't. They will consider the price, they will consider the efficiency, and they will just go for it.
True. Agree, Barbara. And that also gets me to the question of typically what we've seen is I think the origination platforms is where most of the innovation is happening. And when I talk of origination platforms, it's the way you are onboarding customers, the way you are servicing them, the way you are willing to look at alternate sources of data to really arrive at any kind of a credit decision, at least on the lending side of the business. And Santosh spoke about the whole open banking account aggregator aspects of it. My question really is, in the ways of working, right? So while we've spoken a lot about the platform, right, and the way we want to decouple, looking at aspects of cloud, whether it's a lift and shift or otherwise, but just from a ways of working, what have you typically in our experience, having worked with customers, we've seen a two-speed delivery process, right, where the front end assets are developed and deployed, right, at far greater speed and far shorter sprints compared to the backend platforms. Now, in your experience, right, and this question is to all of you all, is how do you marry these two approaches, really from a go live, from moving it into production, ensuring that there is no disruption to existing customers as well? Barbara, you want to take a shot first, and then maybe Sony and Santosh?
I had a little pause in the audio. How do I marry what exactly? Sorry.
The two-speed delivery process of implementing changes at a far greater speed on front-end assets, and then a slower speed looking at the back-end technologies.
Yeah, there is always a dodgy manual background work behind these kind of halfway through implementations. And let's say, I would say the priority is that at least make it digital for the customer, and then we sweat and tear and blood in the back end for a while. But that also kind of jeopardizes the turnaround time of these kind of services, which now is not going to be acceptable anymore. So far, many organizations were making these kind of marriages, as you said, that somehow, okay, let's kind of patchwork a little bit of manual, a little bit of back-end batch, and a little bit of instant looking digital. But now it's not going to be efficient anymore. It's not going to be chosen kind of service for customers if this is the case.
Nilesh, I think I would just like to add to what Barbara was mentioning in terms of the doing a patchwork on the digital, which at many a point of time many entities have attempted. But see, there are two things that comes to my mind, especially on the underwriting and onboarding of customers. Um, a Earlier, the bigger worry for all of us was, do I get my customers to do half of my work by getting him to do all the data and doing the validations then and there so that I can spare the time at the back end. But today, the level of data that is available, Santosh was mentioning about PSD2, the, as you rightly mentioned, the account aggregator framework that is coming up is going to ease. And imagine the huge amount of data that is available, GST, the external data sources is huge spectrum from which all of us are now deriving data, so that eliminates the need for a lot of data entry at the back end. The second important thing that is happening on the onboarding is to try and use data models a lot to make the whole process structured without manual intervention to a best possible extent, maybe up to a particular threshold based on the risk appetite of the bank. This would help marry both worlds, because then you're not too much relied on back human eyeballing and all of that at a later stage, which typically brings down the speed.
Yeah, I think, I just probably take a couple of minutes to quickly give an example of some of my experience with some of the customers that I see. You see, end of the day, it's all driven by the customer journeys, right? So today, it's no more about lipstick on the pig. Okay, here's a UI screen, good looking mobile, and go up, do something. It's more about the entire customer journey. And when you talk journeys, you can't leave it at a halfway. You have to deliver the business value of that particular journey. So therefore, when you talk about the squads, the way the teams are formed, it's more about integrated squads. It's not saying that I'll do something here and I'll do something here. Of course, you'll have dependencies and all of that, different squads working, but at the end of the day, the deliverable has to create value for the customer. Otherwise, it is, to me, it's just a lipstick on the pig. You're delivering something very simple, maybe fancy things, but it's not going to really, stay. Customer will see through it, because, customer experience, again, it's a broader term. I mean, maybe a separate discussion topic, but it's not just about mobile experience or anything. It's about the 360-degree experience. When a customer is interacting with the brand of a bank, it can be a fax, it can be a phone call, it can be contact center, it can be a mobile or a desktop. It's all is the same experience has to be there. So, it has to have the brand image. So that, I think, is a important aspect. So yeah, I mean, that's one. And I've seen, like, a lot of banks adopting this customer journeys and integrated squad models. They're moving into Spotify agile sort of ways of working as well. So those are some of the leading banks, adopting these models.
Thanks, Santosh. I think Amal is on as a signal that we've run out of our discussion time. But I think we have the last 5 minutes, maybe questions, anything that the people listening in want to type into the chat window, and we are happy to field them.
Firstly, thank you, speakers, for such an engaging and informative session. We would also like to thank Mr. Nilesh Nakar for moderating this session so well. And since we have last few minutes left, of course, we have quite some questions. So I'm going to post that in the chat box section. I hope you can read it. And this question is directed to Barbara. Here you go.
Yeah, 1 second. I'll try to, see it. Does the banking architecture is going to cater to all those customers to come up with something customized that is somewhat synced with the purchasing habit of customers to keep the customer booked based on the data we already have? Wow. So I start answering something what I think the question was related to. If not, please correct me. Please throw a line or shout or whatever you can. So the banking architecture of the challenger banks or the new banks are obviously built in a way to cater this kind of cost of a customer per year, which is around $3 per customer, which I said. Those are. But the current traditional banks are core banking and operational architectures are not capable of doing this. So, and especially not if we are looking into the future products, which supposed to line up around the real-time payments caused disruption, and real-time payments cause new demand on the banking side. So that cannot be catered by the current banking core systems and infrastructure so far, since the amount of data, what's management it requires, and what kind of product development it will need to create sustainable and sufficient and attractive products, billable products for banks to run the business. That's not there yet. I haven't seen yet so many banks. Let's say, I would say there are very few in Asia, which started a new type of products like request to pay and merchant pushed direct debit transactions and so on. So these are all completely new ones. And if you look at that through the real-time payments infrastructure, not just the retail products and services and journeys will change completely, but the treasury will change, the liquidity management will change, statements has to be changed, because statements are not 24/7, 360 whatever. It's not, it's just 5 days a week. So all these things has to change and cater the 24/7 operations, which is not there, neither the efficiency on the headcount side, who can operate these kind of core systems at the moment. So obviously not legacy banking architecture is able to cater. I hope I gave the right answer.
Thank you, Barbara. We'll move on to the next question. So I'll read it for the audience. How traditional banks are going to adopt the structure efficiently because they feel more like family as compared to private limited banks. So, how much time can one Indian customer expect to see some offers from cooperative banks on e commerce websites as compared to the private limited banks?
Sony, do you want to answer that?
Yeah, I wouldn't be able to comment on part of the cooperative banks as such, but then I think look, everybody is on this journey of transforming themselves, and every bank, big or small, is taking steps to do that. I think the specific question has two parts. One, where he's talking about how do these banks manage to migrate. I think most part of our discussion was trying to kind of explain as to how it can be done. It may not be a big bang like what Barbara was mentioning about the neo banks, which get to start on a clean slate, whereas legacy banks have legacy customers and problems. So therefore, it takes a little bit longer in that sense. But in terms of offers, I think, see, one of the things that is happening today is that it's not necessary that a small entity needs to do all by itself. There are a lot of aggregators who have come out, who is able to aggregate the business on behalf of these small entities, and then have these tie-ups done with some of the large e-com players. And I'm sure many of the banks in the country are doing it. I think cooperative banks should not be that far behind in that.
Okay. And here comes the last question for the session. Banking now is not only limited to transactions or maintaining a savings account. Where do you see the banks stepping up the game when it comes to value-added services in the coming future?
Anybody wants to take, or I can probably give my view and then you can add.
Yeah, sure. Yeah, go ahead.
So I think this is just my view is that when you're looking at the banking in the future, right? I mean, so it's to me it's like an invisible bank, right? So bank is not important, banking is important, right? So if you look from that point of view, a payment has to happen. Now, which bank is doing, what is doing, it's, for as a customer, it doesn't matter. So that's where I think the bank is going to pivot over a period of time to become a lifestyle bank. So, the services, what you see today is, bread and butter. That's all traditional. I think there's a lot of things are happening. If you look at this, the short-term borrowing, which is now been termed as buy now, pay later. A lot of people are playing into that game. And what is, a few years later, it would just be short-term borrowing. But since Klarna happened, I mean, now everybody is saying, okay, I'll give you 3 installments, 4 installments. We spoke about, Nilesh was talking about this alternate credit scoring, right? How that is an important aspect emerging. So as the bank embed themselves into the customer journeys, there will be a lot of the inferences that they can draw from the data of rich data that comes from the customer behavior and what he's able to do, etc. And that will set into motion a set of services and products, which is more kind of embedding and relevant for the customer in their journeys rather than being like, okay, here are the 2 products and I offer you 2 products and come to me for savings and loans, right? I mean, it will be beyond that, much beyond that. That's just my view. Barbara and Sony can add.
Couldn't agree more, actually. So this is also what I see. So bank is not an independent shop around the corner anymore. It's not something what's buried in different little mobile banking applications. Financing and payment gateways and payment processing is supposed to be there, must be there, where and when it's needed, where the transactions are happening, where the shopping is happening, where the money movement is happening. If it's not there, it's not going to exist. It doesn't have a relevance to exist. People will go to certain lifestyle apps, certain marketplaces, and they start living their life, getting their things, what they need. And if they need to pay for it, and the bank is going to be there with some kind of cross-selling offers, understanding what the customer is doing, where the customer is financially at that particular moment, and able to serve them with potentially relevant products and services and offer responsible finance, guidance, education, and other added value services, which is all based on transaction data and behavioral data, which banks are currently not really on the top of. So definitely that would be the future of banking. So I want to buy something. I don't just get to know that there is a BNPL provider on that particular platform, but my bank will notify that I have this card, I have this much balance, I have pre-approved whatever, which they can already pre-profile me for and offer me with maybe better benefits than Klarna can, maybe, or if it's about a bigger amount, I need more money, or I overspend, I need to stop shopping suddenly because I get in trouble. So these kind of added value services, products, and advisory function a bank supposed to fulfill now?
I'd just like to conclude by
Possibly.
adding only one more point to what Santosh and Barbara was mentioning, which is the fact that payments is only one part of what a bank does. So today, the banks are seen, the pivot would, in my view, be around the trust that the customer has on a banking institution, which I think is going to be the pivot which will help the bank to keep the customer, engage the customer, and offer more and more, irrespective of how deep sort of fragmented the whole journey could be there when he needs at the right point of time with the right offerings, and to also provide trust, because let's not forget, not all journeys are happy journeys. There could be broken journeys, and there has to be a single point where the customer can reach out without being pushed to 10 different players. And I think that's the role that banks have traditionally played, and I'm sure they are going to do that in the future.
Mr. Nakar, would you like to conclude the session?
Yes, and thank you, Barbara, Sony, Santosh. I think it's been a very well-rounded conversation, moving just from the platform to what the customer wants, how we look at data, how banking is really embedded into the various aspects of what a customer like us usually wants, at that moment of truth, and also looking at how it's going to change in the future, including looking at things that are happening in India, especially on UPI, things that are happening on open banking, right? Things that are happening around PII data and how can that have implications on what is stored and what is not stored. So thank you so much for your time. It's been a great interaction. I've learned quite a bit. And I hope our audience is listening in, enjoyed the conversation as well. Thank you so much.
Indeed. With that, we would like to bring this session to the end, and it was an enlightening discussion. And along with that, I'm sure that our audience truly has got some great inputs and information. It was an honor to have you all at Global Fintech Fest 2022.
Thank you.
Thank you.
Thank you.
Would like to thank our partners, Team Partner WhatsApp, co-powered by Amazon Pay, Spend Management Partner Encash, in association with Perfios, Payments Partner Cash Free Payments, CEO's Dinner Partner HSBC, Theme Partner WhatsApp, Platinum Partner Google Pay, PhonePe, Visa, M2P Fintech, MasterCard, Falcon. Registration partner, NTT Data Payment Services. So ladies and gentlemen, let's connect in the next session. Thank you for joining us.